All right. Well, welcome everyone. Anyway, I wanted to record this and kind of, you were asked. I know some people were asking me how to, you know, how do like frame ideas, how to trade on a short-term intraday scalping kind of time frame. And I wanted to show how you can trade without really worrying about the daily bias. Give you a few ideas of the things I'm looking for, since I have been using for some time, that should, I think, make sense a little bit easier for you. And we're going to talk only for index futures specifically. And again, I think the stuff that I'm going to share is, I can kind of already see that probably some people will find it, maybe helpful, and they'll start implementing it. But for some folks, they'll say, "Oh no, it's too much. It's too confusing. It's like I have to look at so many things." So if you feel that way, maybe once you listen to today's what I'm going to share today, if you feel that way, just maybe give it a try. Maybe for like a few weeks, a month, and if you still don't like it, you just don't use it. Very simple. But just wanted to give you something to hopefully help some folks. Maybe even like, I kind of basically want to share pretty much a complete model that maybe you'll find useful, hopefully, or you'll use it together in like whatever you already use in your trading, as your entry techniques, as your determination of bias. Maybe it'll help you as an extra confidence. Okay. And I'm recording this, so eventually I don't want to do it like 2 times in a row. I wanted to share this publicly with everyone else also. So once I'm done recording, I'll upload it on a YouTube, and a private link I'll share with the charters first. And then maybe in the months or so, or like in the next year, I wanted to, just share it with the public. Anyway, so let's get started. I'll ask one thing, just to please mute yourself until like later on. If I'll ask you alone, if you guys follow me, so follow through. So then you'll ask questions, but for now, let's just keep everyone muted, okay? So let's see. I have this little agenda here. So when we look at index futures, okay, I wanted to visualize the concept itself. And I know, so you want to have this is like one of the screens that I have, what you see right now, in the 5-minute chart on all major index futures. And I do know that, the free trading view doesn't allow you this layout. So, I'm sorry, but I think that you should, if you want to make life a little bit easier for you, you should invest in a paid trading view plan. And you don't have to buy the most expensive one, just the most basic, like the first paid one. I think it's very affordable right now. They have Black Friday, Cyber Monday. I think right now the time to buy. I bought myself the premium one. It's right now I think it's a fair price. Otherwise, full price, it is kind of expensive, like $600 they charge you, I think, for the most expensive plan. But anyway, so I think you do have to invest something, to make your life a little bit easier. And like, if you treat trading as a business, which you should, again, you have to invest something to, into a platform or something to see the result. So you have to, this is my layout. Again, we have S&P, NASDAQ, E-mini, YM, the Dow, right? And I want to visualize the idea first. So we start with the PM session, right? We all know that PM session is basically 12 o'clock noon to 1 p.m., right? Eastern time. So let's say we have a range of the PM session in each index, high and low. I'm just going to put here. So let's assume this is the high of the range, the low of the range, right? And I'm going to do it on all three. Let's just put it a little bit lower. So let's see. So range high, range low, right? And somewhere here we have the 50% of the range. Let's just leave it here. Okay, we have the 50% of that high and low range. And this is the high and low based on the wicks. But the idea is to use this range as kind of an Asian range for the PM session going forward. And this is kind of blending a lot of ICT teachings along the way. So if you use Asia as your kind of accumulation a lot of times price later on will come back to this range to retest it. You know, like basically you have AMD cycle, accumulation, manipulation, and distribution. And the other very, very important factor is we also not going to only look at the highs and lows of the range, but highs and the highest body close on the 5-minute chart. It's always on the 5-minute chart only, the highest body close and the lowest body close of that range. And that comes also from ICT. If someone in the chat remembers, maybe you know what I'm talking about. But there was a video somewhere in the 21 charter content that he was going over forex in Asia, and he was using the projections, he was using the wicks and the bodies, the highest up close body on the, it was always on the 5-minute chart. I don't remember exactly what video it was, but I just remember it was there. So if someone remembers in the chat, maybe you can contribute. But the idea is this: we'll look at all three in conjunction, right? Together, price action as live market moves. So the idea is, let's say, I'm going to draw this stuff out here. So let's say price, came down from here, broke below, and it comes back on ES to the 50. And then at the same time, let's say price comes back down, comes up on NQ, it goes all the way back to the high of the range. And YM also does the same thing, comes back up, down, up to the high of the lunch hour range. So in this scenario, it's highly likely that we're going to go lower when all in. It's kind of a, I'll call SM, not really SM, like SM, we know SM, ICT, SMT on the highs and lows. So this is, I would say, this is kind of understanding the advanced correlation between indices. So when we have a range established in all three, and let's say it's enough just for one index to just go up to around the 50%. And let's say two of this, even one is enough, but if the other two, it's even better. Go to the all the way back to the high. There's a high chance that price is going to either at least reverse or retrace back down. So this by itself can be a trade, and I'm specifically sticking on the 5-minute chart. I'm not even going on the 1-minute chart. That's like a whole separate topic, because I know a lot of people kind of not complain, but they said even in ICT teachings that they don't have the time to monitor the 1-minute chart, or even less, like in 15-second chart. People work, study, whatever. So I'm sticking to a 5-minute chart, which I think a lot of people find a little bit easier, and maybe easier to monitor and not as confusing. I've seen people say that 1-minute chart, they get lost in it. So 5-minute chart is literally the way to go here, without refining it on the 1-minute chart. But this is the kind of the idea. So when one index goes back to the 50% of the range. Oh, and well, we'll get back to it in a second. And both go back to the high, you'll probably retrace. And it also, very important part is the timing aspect. A lot of these trades you will see, they happen like after, sometimes it can happen right around 1 o'clock. Let's say range is already established and price retires by 1, but mostly you want to focus on the times from like 1:30, 2 o'clock, 2:30, 3, and 3:30. Like 3:30 is the cutoff time for me. So around those round hours, like 2, 3, or like the half-hour marks, plus minus 5-10 minutes, you'll see price doing this almost every day. This kind of breaking correlation. And I've been using it for, I don't know, for a long time now, and this works. You can trade just based on that, or if there's other things that I'm looking for, it just adds confluence to the trade. The other thing is that sometimes, let's say, so for now, does everyone get the idea? How do you guys feel? Am I explaining it clearly? I think I do. I'm trying my best to kind of simplify it. That makes sense? If you just look at all three and look, if one is weaker, you want to short the weaker one, not the stronger one. Very important. If you want to go short, if it comes from below, you want to short the weaker one. If it's a buy, you want to buy the stronger one. That makes sense to everybody. Kind of drop it in the chat. All clear? Okay, all clear. Okay, 2 people said yes, yes, perfect. Okay. Oh, okay, yes, clear. 2 people. Oh, I have like 15 people on the chat. Nice. Didn't expect that many guys. Okay, yes, yes. Okay, good. So that's the kind of easy scenario. And then if we, let's say, remove this, hold on. So let's do this example. So let's say the Dow breaks below, it comes back here, just to the low of the range, and also retraces. So like I said before, out of all three, you would want to short ideally because it's very easy, I think, to visualize, right? So if you have this index came to the 50, this came back to the one, this failed to go any higher than basically the low in the range. So this is the weaker of all three at the time. So ideally, you kind of want to short it, but the thing with Dow is that UYM, it's a little bit, I kind of see why ICT doesn't like to trade it. It's a little bit, there's only 30 stocks in it, so it's very easy to, if there's some kind of news comes from a separate company, and, each company has a much bigger weight in the whole index. So it can be a little bit more sporadic. So I usually don't trade the Dow. I usually don't, because sometimes it can wick you out or like do something a little bit weird and then like go into the direction, I don't really like trading it. The more I started just focusing on index futures, the more I realized that ES and NASDAQ really is the way to go. It's very beautiful markets. I don't trade Forex anymore at all. Like I look at it, but like Forex looks foreign to me, pun intended. The more I look at these markets, it's just beautiful how they behave. So if this is the case, also you have kind of show you this, relative divergence of price action, and you don't want to trade the Dow, you just go back to, again, you look at the other two and which one is weaker. Obviously, yes is weaker, so you short this one, you short this one, you short yes. Another idea is that when all three, so this is my favorite scenario. This is my favorite scenario. Let's maybe like this. Let's see. Sometimes, let's say, you'll see also that all three come to around the same area. They come to the high of the range, and then you can most likely also, there will be some kind of a retracement, or like a complete reversal. And again, the key times are very important. You look around the full hours or around the half hour marks, right? Plus minus 5-10 minutes. And then you don't have to, this is why you don't even have to worry about the overall daily bias. You can just look at this and like, okay, so let's say if you enter, where do you exit? So if there's some kind of inefficiency here, your exit can be just like here. And we'll go up obviously on the, on the Excel charts and candlesticks, I'll show you. You can target this inefficiency here. Or if there's a short-term swing low, you can target that here. For 1.5, 2R in and out, usually most of these trades don't last longer than, if you're on the right track, if you like read it right, most of the trades that will be less than half an hour in duration, maybe like 40-45 minutes tops, but most times less than half an hour. So if you enter somewhere here, you can target this inefficiency and this stuff, and you're good to go. That's all you have to look at. Everybody should know by this time that inefficiencies like to be rebalanced, retraded to, or like a short-term low, that's like your liquidity there. So simple as that. You don't have to worry about the overall bigger picture bias, okay? That's the idea. So let me remove all this. And you might be thinking, well, that's a lot of work to like draw this stuff out, but there's an indicator for all this stuff freely available to you. Let me just remove this. Actually, let me just, drawings. There we go. So hopefully, so we're looking for SMT, so we're looking at SMT, but within the range. So kind of, it's, again, as you know, SMT, it's always just on the highs and lows. This is a little bit more advanced. I wouldn't call it but in a way, it is SMT, but just on another level. Okay, you're looking at specific time range. And there's two ranges, actually. I wanted to give you guys just one at first PM session, but then I realized, why, why hold back, whatever. So there's another range for people who maybe cannot trade the PM session. So there's another range for the pre-AM session even. So their range is from 5 to 6 AM Eastern time. From 5 to 6. Oh, you also treat it as kind of the AM pre-lunch hour, whatever you call it. Like you treat it sort of as the Asian session in Forex, 5 to 6. All right. So we actually going to use an indicator, and I guess those who know me, I'm a very all right, I'll get back when it's sometimes lunch changing, not exactly consolidation. Yeah, so it doesn't matter. It doesn't matter. So if it's changing, you'll see what I'm talking about. It doesn't matter what the lunch hour is going to do. It can consolidate, it can trend, it does not matter. You'll see that it happens pretty much almost every single day. Something like that. You know, sometimes there'll be like more than one opportunities to enter. So you know me, probably, if you follow me or whatever, you know that I'm like a drama-free guy mostly. I mean, I am a drama-free. I don't like, I mind my own business. I just, I trade, whatever. Sometimes look at social media, what they're doing. But the irony is that we're going to use the indicator of a guy named M7, the master, right? And he actually, he's the only one probably who had me block on Twitter. Simply because there was once I said, I think all he was posting was just screenshots of TradingView with risk reward tools. So I just said, hey, I mean, that's all I see. I see that's all you're posting. Like maybe show your followers, just some kind of equity curve or something more meaningful and just like risk to reward screenshots. And the guy just went all aggressive defensive right away. He just said, oh, you have to have high IQ to understand it. And he blocked me and like, all right, whatever. I never called him a scam or fraud, nothing. I just pointed it out and he just blocked me. Anyway, doesn't matter. We're going to use his indicator because it's actually really good. It's called the DR IDR. I think there's a newer version. I'm using the 1 point. Actually, let's have a look. DR IDR. Yeah, I think there's 1.5. Let me see. Maybe some more stuff. I don't know. So, it's freely available. Doesn't matter. I'm using the old one. So this is what you want to do. Like I have however you want it. So this is a lunchtime. These are the settings. And again, everything's recorded, right? So you can have a look later. You can maybe, take a picture now. So from 12 to 1, the lunch hour. And I have the lines basically extended here. You see the lunch hour. Well, this is Friday, short day, but you have the lines from lunch hour close to up until 4 p.m. Okay. And then we have, like I mentioned, the AM session, pre-AM session, which is from 5 to 6. You can see it here. From 5 to 6. Hold on, give me a second. Okay, 5 to 6. And again, 6 to, I extended up to 11:30. After that, usually after 11, I'm usually not interested in taking any more trades, but I have it up to 11:30. Sometimes there's some kind of also setup around 11 o'clock, similar to what I just described. But usually for the most part, you can take trades before 9:30 even market even opens. You can take it, and the same idea applies. I'm not really interested in trades before like 7 a.m., 7:30. That's where you can start looking. Again, round numbers: 7 o'clock, 7:30, 8, 8:30, 9, even 9:30. 9:30 for like if you want to test this out first, you might want to omit because again, it's a market open, they can be a little bit more injection of volatility. It can be all over the place. It can wake you out. Okay. So what was I about to say? And then again, so 9:30, like 10, 10:30 up to 11 o'clock, maybe the latest 11:30 sometimes, but you have plenty of opportunities. You'll notice that so many times setups like this will happen around these in half hour times, okay? So let me just show you a few easy examples and then we'll go into some more difficult ones. And I'll show you also because I think I mentioned like about 3 weeks ago that I wanted to do this webinar. So I actually took screenshots of the trades based on what I'm going to what I just showed you. I took screenshots of my personal trades that I took and we'll go over them also. So let me go November 21st first. Let's see. First, why is this not loading? Come on. Oh, of course. Hold on. All right, so far so good. Okay, so please, if you just jumped in again, just mute yourself. We'll have time for questions later. Okay, thanks. So look at this. This was Tuesday, November 21st. Some easy examples. So we did have a large range day on Monday. And usually, after large range day, price can consolidate, not do much, or not always. It can actually also produce a nice range, on the opposite end. And you can kind of see we did have the classic SMT, ICT SMT as you know it on the highs, right? Monday high, like in Asia, made the high, and the Q did a higher high. So this is your classic SMT. So actually after a large range day, we were dropping. But all this, it kind of doesn't even really matter based on what I'm going to show you. You can keep an eye on this to have a bigger picture. That's always good, of course. But even without it, just the setups, what I explained to you. Look, around 8 o'clock, we have this. Price came all the way from back down, back to the 50%. Oh, so this is important. Okay, so hopefully you got the settings. So we're showing the so this is the high and low of the range, right? The wicks. This line shows the highest up close body, and this line shows the lowest down close body. Okay. So these are the settings. Again, I forgot to mention it, sorry. But this 50%, is not from the range high and low. This 50% is the range is between the range of the bodies. That's very important. So I think it's code as an showed as an IDR. IDR, no, is it? Oh, show middle IDR, I guess. Here, yeah, I have it here as an IDR, it's called, whatever it is. So this middle line is actually the high and low of the from the bodies. Please mute yourself. Sorry, guys. Whoever jumps in right now, please mute yourself. Okay, I'll just mute it. Okay. Thanks. So look at the timings. 7:30. Price comes to the 50%, wicks above it, never closes above it, and at the same time, and Q comes back to the low, wicks this low, never breaks it. 7:30. YM goes all the way up to the highest, also kind of goes wicks above the high of the range, and price starts breaking down lower. Please mute yourself, guys. I can't really do this if you keep, sorry. We'll have questions for, time for questions later. Thank you. Thank you. All right. So again, see, it's a little bit distracting. I'm trying to focus. It's very, someone else is also, it's distracting. Please mute yourself, guys. Okay. I don't know how to like mute everyone on Zoom. So anyway, look, again, around the half-hour mark, this price action happened. You see that the 5-minute also closed, the body closed below the 50%. The next candle wicked through it, but closed below. At the same time, we have a divergence. Price broke below the range, came back, retested the low of it, while YM was, again, doing basically taking out the high. So this is the setup I'm looking for. Again, at the time when I'm interested in, around 7:30, a little bit later. So again, you want to, based on what I taught, you want to short the weaker index, and the weaker index is the one that failed to go higher than the other three. So in this case, it's NASDAQ. So let's say you waited for this candle to close, you see that it's clearly rejecting this. So it's okay. If you want, just again, it's a 5-minute chart. You don't have to be extremely precise. You can just enter on the next candle when it goes a little bit inside the candle. Or you can just enter as the candle closes, really, as you see it real time. Maybe clearly it's not going, to close above it, you can enter. Whatever your kind of entry criteria is, you can wait for next candle to go a little bit inside this candle. It's fine. Sometimes you will miss opportunities because it will barely, it wouldn't even go that far and just drop. But let's say you saw this price, you saw this candle kind of coming back into this candle, and we're not even going to go with the best entry. Let's say you just entered, I know, here, right? So you can have your stop at the, just a little bit beyond the wick, nice tight stop, 12 handles, and you can target your, well, if you target this low, obviously that's, not too good, but at the very least, you can get That's less than 1 hour. Here you can get one, like 1.5. I like to just target usually 1.5. That's my, in general, how I scalp is around 1.5, even sometimes less, because I do a lot of high frequency scalping. So to me, I'm very comfortable with this kind of risk to reward. Okay, but you can target in general 1.5 to 2, up to how you want to frame it. Or if you want to go on the 1 minute chart and see some kind of refined trade, maybe you can do that too. This is not the focus of this webinar, maybe a later one, but we'll just stick into the 5 minute chart because again, a lot of people said that 1 minute chart is just too much for them, or it's just much easier to monitor. So you can look at what's on the left too. Like, let's say if there's an inefficiency, clearly a big inefficiency from the previous day. So why not target even the low of it, right? So you get your 1.3, 1.5R, you can get to it. And you can get your 2R, and it doesn't even go to the 50% of it. So that's the example here. And why you want to short in general the weekly index? Because again, sometimes it can, if you, let's say, short this one, in this case, it played out also very nicely. But if you short it, sometimes it can still throw like a wick, and maybe if your stop loss is too tight, it can stop you out. Trust me, I've been doing this for a while, so it happened to me. So I'm kind of giving you a way to avoid more stop outs. You want to always short the weaker one in general. You'll be all right. And look what happens next. Okay, so let's say you missed this or whatever. Let's say you missed this, but this was a nice, simple and ink example, in my opinion. Look what happens next. A little bit later in, like around 8:30 also, right? This week, 8:20, 8:25, 8:30. So this price literally comes to the low of the range, while NASDAQ doesn't do anything, just small retracement. Again, around the timings that we are interested in. And YM, again, it literally comes to the high, the body high. So this is also, and all these are already 2 trades before the market even opens at 9:30. So again, you want to short the weaker one. And let's say you're waiting for this candle to close, you think it looks good. Again, this price comes back into the previous candle, wherever it is. Not going to pick the best entry even. You enter somewhere here as it goes inside the candle. Your stop loss can be like here. Very small stop, 7.5 handles above the swing high. And same thing. You just target whatever you feel like, whatever like your risk to reward, whatever you want, whatever in like your trading. This is like up to you however you want to frame it. 1.5, 2. This one just dropped crazy, but I mean in general 1.5 to 2 will serve you good. And again, in this case, you can see this is the range from the previous day also, right? So if you want, you can target the 50% of the previous day's range. However you want to, like, or if there's, again, even without it, you see that there's still a huge inefficiency unfilled, right? This is your inefficiency with an order block here. So this can be just your target, simple as that. I hope these 2 examples make sense. What do you guys? Let me know in the chat. Does this make sense? Again, I think some people will find it maybe helpful. Some people find it confusing, and that's okay. Again, there's no one size fits all. I wanted to give you something that I use every day at the confluence for my trades. And I can take trades just based on that alone. It literally happens pretty much every day, AM, PM session, whatever you want. Yes, makes sense. Yes. Okay, good. All right, so what, guys, what we're going to do also, because I'm using the free Zoom version. I forgot it only gives you like 40 minutes. So yeah, of course, we'll go through another days, and don't worry. So I'm going to, right now we have only 7 minutes on Zoom, so I'll send you another link in the chat. And then, once we're done, I'll just combine 2 videos or whatever, like, into one. I'll upload it in YouTube. You'll have it there. Okay. So primarily based, time based, which is yes, it basically, the whole idea is there are certain times that create ranges that are very influential. So the easiest one, that's why I start with the PM session, because it. ICT talks about it. 12 to 1 is the lunch hour. And he also says that If you are not very experienced, it's hard to trade it, but you can. But it's very influential for the PM session. As you can see, price really likes these levels. So it's kind of, you treat it as the Asian range for Forex. Accumulation, manipulation, distribution. If you have, it doesn't matter if the range is trending or if it's consolidating, price likes to come back to the range, to the 50% of it, and then repel, in the other direction. That's the idea. And then, so yeah, it's very, I think to me, it's a very, it becomes second nature, once you just have it for like even just 1 month, look at it every day, even in hindsight after the fact, you will see this things happen over and over again. But if you have the time, just try to anticipate these things happening, as they form. And I even gave you the times that you're interested in, around the half-hour marks or the, full hour marks. It's really that simple. And the AM session is 5 to 6. Why 5 to 6? That's a little bit separate topic, but it's not that hard to figure out. Okay. I don't think ICT ever mentioned this time, but he did mention that he can take trades on index futures after 7 AM. That's what I remember. So anything before 7 AM, I'm not even interested. I'll let the range form. And anyway, I'm waking up around 7 AM anyway. I usually start looking for trades around 7:30, 8, but wherever you are in the world, I think this allows you to trade pretty much anywhere in, different time zones. So, and it's a 5-minute chart. So hopefully it appeals to more people. So, okay, question is, do you incorporate 90-minute macro for interest? So I know I do not subscribe to the idea of there's a 90-minute cycle theory of day, I think the guy is called on Twitter. He says that the macros start from midnight. I do not subscribe to it. And maybe it is the case for Forex. Okay, I don't know. I'm not touching Forex. I'm completely not interested in Forex. Maybe this is the case, but for index futures, it's absolutely, yes, you can see the delimiters here, the dividers, the 90-minute cycles. To me, it makes sense for them to start from 2:30 AM. From 2:30, and then, again, not every 90-minute is a cycle. And then kind of, if you think about it, the ICT silver bullet, 10 to 11, it's a new cycle, starts from 10 and ends at 11:30. So by 11:30, you definitely want to be out of any trades, or if you're in a trade, you want to have it to be in break even and, let it run. So to me, 2:30 is when it starts, not midnight. Okay, because if you do my midnight 1:30, then it actually shifts by like half an hour. That's on index futures. I've been using it for a very long time, and if you just kind of plug those timings on the chart, you'll see how, again, price literally like, consolidates. Let's say here, 7 o'clock, consolidates, kind of does a Judas swing for that cycle, goes up, goes down, comes back a little bit, retraces into the range, starts dropping at 8:30 again. And that's why, again, I mentioned those timings, the half-hour timings and the full-hour timings. That's kind of, but it's not, you don't even have to worry about it too much. Again, all you have to know, they have the ranges, and you start looking from 7 o'clock up until 11:30 at most for these trades. And for the PM session, from 1:30 to like 3:30, something like that. Sometimes there's a trade around 1. Usually when at 1 o'clock, sometimes they sneak in the bond auctions, the 10, 20, 30-year bond auctions, and you see just the one directional move, quick, sudden move. So that's when it's important. Sometimes there'll be literally, those trades will form around the 50%, let's say, of the area. But so you want to keep in mind those events, like 1 o'clock Eastern time, PM, there's bond auctions. There's 3 months, 6 months, they don't matter usually. But the large ones, long 10, 20, 30, they are important. That's when the market can just aggressively go into, one direction. So let's see. Another example. We have how many? We have 2 minutes, and I'll throw you another link. Let's see if we can do another example. I think, let's see, PM session 20. Oh, this was the example I just mentioned. This literally was the Monday 20th. If you look on your calendars, this was the 1 p.m. bond auction, 10 and 20 year, I don't remember, but some of the longer terms. So you see price just repelled. But in this case, again, the lowest body close on ES was established already at like 1240. Yeah, so it just wicked. It was wicking, made the low here. Look at the bodies. They respect this level. And at 1 o'clock, it just repels. So this is something maybe when you can have a look for those types of setups when you have the confidence in doing what I showed you. Otherwise, if you're on, if you want to short, you're gonna, I mean, this is an immediate stop out with potential slippage because it's such a huge move. But literally this happened. Yeah, like you see here also, YM created the low, the bodies here, wicked it, never went below it, and just repelled higher. So is it random? I don't know. I don't think it is. So I'm going to send you guys, give me like 2 minutes. I'll send you another link again because Zoom gives you only 40 minutes, and we'll go over more examples, and I'll show you examples of the trades that I personally took, wins and losses. I'll show you all about it. Okay. So just, yeah, keep an eye for the link. All right, welcome back, guys. Again, just a quick check. You can see my screen. You can hear me.
Yes.
All right, cool. Awesome, thank you. Again, just for now, I'll ask everybody to mute themselves, and then we'll go over questions later. Thank you. Let's wait just 1 more minute. Cool. I hear you. Good. Nice. I know it's a Sunday, maybe even Monday for somebody who's in, if someone is in Asia. But hey, again, everything will be uploaded. I'll do it, the YouTube link, the private link first. I'll share it in the chat. And I'm doing it on purpose because it looks like we still have some leakers in the group. So there's nothing to leak. I'm going to release this publicly a little bit later for everyone else. Hopefully, I really hope. I'm glad. Most people so far said that it makes sense. I'm glad. Because I was afraid maybe some people say it's overwhelming to look at all three at the same time. And for those of you who don't trade indices or trade something else, I'll have at the very end, I'll have a little gift, I guess, a little surprise too. So look, does it work for London session and from you? Let me see. Am I recording this? I think I'm recording this, right? Yeah. All right, so you don't have to, again, we are focusing just on the things that I just explained. You don't have to worry about mini kill zones or Williams percent R, nothing, okay? It's very simple. I mean, in my, like, you just focus on this, what I explained to you, this range. It's a time-based range. Once it's established, price, the idea is that future price is going to use the current range as reference point for reversals or retracements. And if you put all three of them together, you'll see where the Kraken correlation happens. So this is like the advanced SMT. I don't really call it as I would just leave SMT as the difference on the highs and lows. So this is just advanced understanding of advanced index correlation, or something like that. And I even have a name because again, what I explained can be just framed as a separate model by itself. Again, you see something like this happening at key times. You see an inefficiency above or below, or like short-term high-low. That's your exit point. This can be a model by itself. I even have a name for it because it's three indices. Let's call it just the AM Triad model and the PM Triad model, right? Very simple. You don't have to worry about anything else. Like, no, whatever, like, if you feel like, if you get this and if you like it, whatever your understanding of the market is, you can implement it, use it as a confluence, use this as a confluence to however you are already trading. But again, I'm doing this because I see a lot of folks still asking, like, how do you frame like bias? How do you how do you trade? And that's it. You don't have to worry. I'm showing you this, that you don't have to worry about. When you wake up, you might not have a slightest clue of what price is going to do next. And it's okay. Like I don't really care about what I really wake up, I look at the ranges established, I look at liquidity established during that same day, mostly highs and lows, so the previous sessions, or and this is like that's how I trade. I don't care about like what it does on the daily chart, not even maybe on the 1 hour chart. I don't draw out like daily FVGs on the chart. I don't do it anymore. I used to, but it doesn't, you don't need it. If you trade even on the 5 minute chart, I mean, you can look at the 1 hour chart, maybe see some inefficiency there. Your price might gravitate towards it. That can be your exit point. But for the most part, you can just work with current day's liquidity and sessions, highs and lows, what has already been established. This is why I showed you two ranges from 5 to 6 and the AM set pre-AM session basically and the PM session. So I think wherever you are in the world, you should be able to find time to, trade something. And again, the beauty of the AM session, 5 to 6, is you can trade before the market even opens, before 9:30, or you can trade after 9:30. So it gives you it gives you flexibility, I think, in my opinion. Okay, let's go through another example, right? Here. And again, it's very short-term trades, in and out, mostly less than half an hour long. So, you take a trade, you go about your day, or, if you can look for other trades. So here, look, so in this case, again, same thing, right? We have the range from 5 to 6 established. It goes to the 50% of the range. And when? 7 o'clock, round number. Like this is where I honestly, I wake up at 7 o'clock. So I don't even, I'm not trading this, but you can. Like I'm interested in after 7:30. But like I said, from 7 o'clock, you can start looking, framing for trades. Look, this case, they pretty much all agree, 7 a.m. So just let the range establish, ignore what happened before. Look at this. Look at this. Again, sorry, please mute yourself. Thank you. It's a little bit just distracting, to do all this stuff. Thank you, thank you, thank you. So again, in this case, pretty much all three indices agree, right? This wick, YM again did through this wick, the body closed way below. And it gives you so much time. It started doing it at 7, but really it started dropping like after 7:30. You see, so it gives you like half an hour to like enter here. In this case, like doesn't matter if you like they kind of all of the 50%. So you would be right to trade either ES or NQ, doesn't matter, and gives you so many times. Look how the bodies, how you see how the wicks basically respect this 50%. When YM wicked this once, came back down, created your imbalance at 7 o'clock, wick basically, redelivered this here. So this area is now balanced and then dropped. So again, we don't really trade YM. I mean, you can if if that's your jam, then go for it. I don't. I trade ES or NQ, mostly NQ. So in this case, what do you short? Doesn't matter. Someone is still. I'm going just to mute everyone I see here. Mute all. Okay. There we go. Thanks, guys. All right. So in this case, you can trade, either or ES or NQ. I like NQ mostly, so it gives you plenty of time. So let's say, you saw this and like you entered somewhere, I don't know, here, like me, price maybe after this candle, you definitely think, okay, this is going lower, so you wait for price to come back inside the candle. I'm not going to give him like the best again, maybe just this kind of entry, so you just like it opens, that goes in a little bit, you can enter. You stop. This is a little bit, I mean, it's still a small stop. And if you want to be very safe, this can be your stop. If you want to be a little bit, more kind of, I guess, advanced, you see an inefficiency here and you just put, it's a long wick. So a little bit above 50% of the wick. But let's just say whatever, your stop was here. Let's say this was your stop, 10 o'clock, 10 points, 11 handles. Does it give you 2R? Clearly it does. I mean, and you target what? What do you have? You don't have an inefficiency here. You have a swing low here, right? So that's simple as that. Here already gives you, a little bit 1.3, in and out before. Could be for some of you, it works. This is something I can take 1.3, 1.5. I'm out. I'm looking for the next trade already, and that's how I keep taking those like small scalps in and out every day. But if you cannot watch the market all the time, you can target at least 1.5. Does it give 1.5? Yes, it does. A little bit below this low, it gives you 2R and even like better, like almost 3R eventually. And then all of this before the market even opens. So this is a trade here. And then here, look, I mean, even like before 9:30, so this is like could be a little bit tricky if you so if you are in a trade and it doesn't maybe hit your objective before 9:30, now you know how now certain 9:30 can be. It can go into your direction, but first it will maybe throw a spike, a wick against you and maybe stop you out, or like, do a or maybe you're wrong completely and, go the other way. So if you are in a trade and it doesn't hit your, target before 9:30, if you're not certain what it's going to do, just close the trade in a small profit. Simple as that. Again, look at the time. Is a random around 9 o'clock, right? You see 9 o'clock, it starts coming back to the 50. Nasdaq is wicking the 50, never closing above it, like this wick here. And YM is not even getting to the 50%. It's staying below. You see that it's like breaking below. It's not even getting to the 50%. Where is it? 9:15, 9:20. Yeah, so somewhere here, like around 9:15. Yeah. So let's say you waited for this candle. If you're not sure here, you waited for this candle. And if you enter this price comes back to it, this is a big stop, but this is a large stop. I mean, not large stop, still 15 handle, that's fine. But maybe you want to do 50% of the wick, or even if you did this one, whatever. Like just pick the worst case scenario if you want to be extra safe. Oops. So what do you target? There's an efficiency here, this low. If you targeted this low, it never came to it. I mean, still, even with this stop, you can get to 1R, kind of a little bit 1R right before 9:30. So 9:30, if you, again, at the very least, if you want, what you want can do is put your stop at break even. So a little, a few points in profit, because this price action will most likely slip you a few points, even on futures. But, you have an inefficiency here with this long wick here. So you can, inefficiency here, you can get to 1R just before 9:30. Get in, get out. Nothing wrong with that. That's kind of my philosophy. And you just look for the next trade. Maybe you already took this trade, so you're like 1.5R like in profit, maybe 2R here, so you're good. You take a quick scalp, you see the price is not, maybe your last target was this one, like for like 1.82R here, and it never reached it. So at the very least, put your stop loss break even. Or maybe if you go in more than one contract, just take a partial, pay yourself, move your stop, so it stops you out. You still paid yourself a little bit. It's still a small win. Simple as that. I mean, you don't have to overcomplicate it. There's so many examples. So hopefully, let me see. Wicks and bodies. I made the first. Okay, if you missed the first session, don't worry. Again, everything's recorded, so you'll just have to watch it later on. I can spend time explaining this again. But just follow along for now, just listen to it. If you like it, stick around. If you don't, just watch it later. Doesn't matter really. And hopefully this just helps you guys. And look how this range is just influential throughout the day. Look, 9:30 happens. Look at how these bodies, and 9:50 again, what, close to 10 o'clock. That's the 9:50 to 10:10 ICT macro, right? Everyone now knows about it. So look how these bodies in 9:45 literally respected this range from 5 to 6, and boom, went higher. This went, while this never came back, never came back to this range, and we just went higher. And Q at the same time, YM kind of broke above, went like started consolidating the 50%, went higher. So maybe this is something you missed, and that's okay. I actually missed this myself. I didn't see it. Like, yeah, I missed this. But I did take a trade here, and I'll show you. Not even this trade, I even took not even on the futures account. This was on an MT5 and the CFD broker. I'll show you. So sometimes I see people ask, why would you buy, let's say, why would you buy here when prices already moved high? Some people think that this is premium. Why are you buying in a premium, right? So, and I had the same questions when I started studying ICT. It didn't make sense to me. Why would you buy like up here when price already moved up? So hopefully maybe this will help you see how you can frame setups, continuation setups. Look, 10:20, close to the 10:30 hour, right? It literally wicked right to this level, while YM just dig deeper also into the range, but closed way above, and NQ never even touched it. So to me, this indicates strengths. Price does not want to go lower. And while this itself, eventually, if you really study this and you become good, you can take a trade before this candle even closes. If you see that it repels from here, you can take a trade somewhere inside the wick, but that's advanced. But let's say you missed it. Okay, so you wait for, or I mean, you're not certain, is it going to keep going down? That's fine. You wait for the next trade, next candle, it goes up. So kind of looks like, okay, price clearly, bodies are closing way below, way above. It's not going to want to go higher. Okay, so you went for the next candle. In this case, again, both ES and NQ are above the range, so you can go long on either of them. But this is I think maybe a little bit advanced from the ICT part, but now it's available everywhere. I think you should remember from his lectures. What do I have here? This is basic ICT stuff. You have an imbalance here at the same time, 930 imbalance, right? And we have an imbalance here, the same imbalance, basically same time, right? And you see that's the SMT on the FVG, basically. This candle here never came back. Anyway, price action never came back to this imbalance. So while NQ came back to revisit the imbalance, right? So that's by itself indicates bullishness. It indicates that ES is stronger. Hopefully that makes sense. Again, that's like ICT, a little bit more advanced, but he talked about it many times. Differences on the if one index, if we are bullish, if one index comes to an FVG and the other one doesn't, the one that doesn't come to an FVG is stronger, and you see like he has repel higher. That's very basic. Well, not basic, but again, it's there. I mentioned it in my videos, also on my YouTube. I mentioned this several times too on the live recordings, and so this is very powerful. So you can use this if you understand this in conjunction that price doesn't want to go lower, and buy. Well, if you want to do is NQ, price comes back a little bit inside this candle, your stop is just here. I mean, it's fine. Less than a 5 handle stop, and again, you can target this already more than like 1.36 handles here above this high. 1.5, it gives you 2, and even eventually gives you more, again. However you like, whatever your risk tolerance is, however, like whatever you want in terms of R, that's up to you. I would say you'll be very good if you just target anywhere between 1.5 and 2, my average R like recently is 1.3. Well, I take other trades, not just based on the setup, but that's in general 1.3, and that's it. People say it's terrible R. I don't give a shit. I mean, like you clearly saw, I sent some results also on Twitter and stuff posted, and so many results before. So that's how I scalp. High frequency scalps in and out. Simple as that. So this is, I wanted to show, I actually took this trade on NQ on the, let me see. So I knew I was going to do this webinar for you. So I started just taking screenshots of the trades. Just recent trades, specifically for you guys. See how much I thought this through. So, and you can see, look, every single trading day, from like, I did it for like a week during the CPI, like Thursday, Friday, every single trading day, like there's something every single day, AM, PM session. So look, this was the trade 20th. This was on the CFD broker even, like you can clearly see this was the NQ buy. If you want, you can go to the 1 minute chart. This was my entry here. My stop loss was below this low. I took a partial above this swing high here, and I closed the trade above this swing high and an imbalance here. That's it. The price go beyond that? Yes, I clearly did. Do I care? Not really. That's how I trade. This trade fit my typical R criteria. If I held a little bit longer, sure, great, but I didn't. So who cares? I missed on that. Next trade. Simple as that. So ideally, that will take me probably a few years. I'm working on holding even just small partials for longer targets. That would be nice. But so far, I've been doing good with, with those small R. Simple as that, okay? So let's go backwards to just most recent ones. Okay, so this one, this is actually a good example. I took a loss and then immediately realized I was wrong and took a win. So here, look, this was, you can see on the 17th, November 17th. Yeah, so I've been taking this. You see, so I took this long here after this candle came to the lowest body close here, and this price pierced through the low, and YM was just here around the the high of it. So I took this long, and I was in profit a little bit, and then it like never went above where I wanted it to go, just literally stopped it and, took me out. So this was a loss. I bought here on this candle, right? And this candle stopped me out. My stop was here. And I immediately realized that I was on the wrong side. I read this wrong, and I sold NQ here because simply of how, again, we barely went above this 50%. This may take a little time to understand, really. Like, this takes experience, but this, again, while ES went a little bit above the high, but we're already breaking down. So breakdown came to the 50, barely. This broke down, came to the 50 with the bodies. Yes, the bodies is like ICT always says, wicks do the damage, bodies tell the story. So all those things together combined, right? They kind of form everything I'm showing you is based on his hints, it's all over the place, kind of piecing the puzzle together. So hopefully it makes sense. This body never closed above this. So kind of this was your, was it resistance, like real resistance. And at the same time here, these wicks here on YM, you can see the price is wicking the upper portion. So it's not breaking it. It's wicking, wicked once, closed below. Came like, did another wick, closed below. So I'm like, okay, I'm short. So I took 2 shorts here, I did 1 contract. And this was also before 9:30. Like around, like, yeah, this was a 9:30 open. I think it just dropped with 9:30. So I held this through 9:30, I closed it. See, like, again, so this was, I took a loss, boom, I showed you, and then I recovered the loss with, I realized I was on the wrong side. It was not a buy, so I sold it. This was a little bit maybe tough to read again, but there are a lot of examples when it's much easier. This was also like, so the price, this was a PM session, created a range. You see there was a little reaction in the 50% when the indices came back from down below up to the 50%, you see a reaction. So I sold here. You see where my stop was here, and I just targeted this, the lowest body, 5-minute body close, right? Which was this here, and then Q was, where's NQ? NQ was basically the also on the low end. So while this was a little bit in profit, this was a losing trade here. And notice that my stop was at 75, but I closed this the moment I saw this candle, like not, and like basically this bullish candle and like this move up, I realized, okay, this is not going to go, this is not going to go lower anymore. This is just a small little retracement, and I actually closed in a loss at 67 instead of 75. So I said to myself, I realized I'm taking a small hit. But this was already, it didn't really matter because I took this short here, quick short here, because around 2 o'clock also. Again, same timings, always. See, like, it's not a coincidence, like half hour, full, or like full hours. I took a short here after I saw that these bodies, wick, it respected the 50%. This body stopped right here. And this was this was maybe a little bit tough of a read. This comes with experience, but I saw that again, NQ, YM was wicking through this upper portion, never broke it, and literally NQ just stopped the bodies here. So I sold here just for a quick, run into the low of the PM session. So this was just a little, I give back a little bit of that, that game. Let me see. This was, okay, let me see, Thursday. Okay, so this was, again, even a late entry. So I'll get to that. How you trade out other commodities, I'll explain it in a second. Look at this. So price went above the range here, right? Again, 9 o'clock. Look at the timing, around 9 o'clock. Price bodied through above the range, both on the S and NQ, but YM gave the hint. It bumped into the low end, never closed, never closed above this, and literally just next candle, like pretty much closed on the lower portion, and it started dropping. So I saw this. This is a late entry. If I saw this on time, I would probably enter somewhere maybe here. But even with the late entry, you see how, and again, before 9:30, I'm in the trade. You see where my stop is. My stop is basically at the low of the order block here. I trust my analysis that this is a cracking correlation. This is just a stop run above the range, while YM is just bumping into the low end. And this was a very quick with 9:30. Again, target, where's my target? Just this inefficiency, the low of this inefficiency. I don't need it to go below this low. Simple as that. So you can see Well, this was a 2R, basically. This was a 2R, 48, a little bit more than that, right? So you can see that actually, like if, I close it, this was the 930 wick, it take care. Yes, so YM again, so maybe you missed it. YM is the weaker one. So again, I'm not trading YM. You can if you want to. So you always want to trade the weaker one, sure. But I just don't like YM because sometimes it can throw those weird wicks. So I just don't trade it. So out of these two, doesn't matter which one. So that's the idea. Okay, you can trade YM if you want to. Again, I just personally don't like trading YM. Again, it's a little bit more like, it shows a little bit more weak sometimes. You can, yes. In this case, if you disregard that, maybe fact, kind of, you can trade the YM. But I just seen this so many times. I stick to something that works, and ES and Q are much better. So so hopefully that makes sense. So this was just examples also, and then Wednesday, again, going back in time, just a quick scalps in and out. This was a buy on the ES here when it kind of wicked, I broke above the 50, but actually stopped me at break, stopped me a little bit better than break even with this candle here. I entered again around 230. I entered again because look, the wicks here wicked all the way back down, but closed the body. I was entering on the, I think somewhere here, basically, like before, I think this candle closed. So, and took out, closed above this high, while NQ respected with its bodies, it's weakened below, but its bodies are respecting the low end here. You can clearly see it. And at the same time, YM is at the high. It's bumping, retesting the high of the range. So again, I don't trade YM, but if it was, let's say, NQ, it indicates me that it's stronger at the moment. So I would enter this. If this was NQ, I would enter this long. Okay, but because I don't trade YM, I entered on ES. And just again, I got yeah, just close my trade above this high, the quick scalp, and then again here at the end of the day, just wicked. This is a little bit maybe again because I've been doing it for quite some time. I notice these things as they happen. I don't need to wait for a candle close. So I entered somewhere here and just quick scalp. When it bumped into the range here, I closed it because I saw that at the same time. I saw it was going to go higher. It didn't because you can see it bumped into the high of the range while NQ wicked the high body close, but closed below. So I just didn't like it. I closed the trade and good thing I closed because otherwise it would be a break-even trade. So yeah, things like that. I kind of on the fly, well, you see, while the market gives you information, you can adjust. If you think that your target is here, but you see that this price action, just close the trade or take a partial, at least move your stop. But that comes with experience. This was three. We have to go back. This was Wednesday 15. Look again, around 9 o'clock. Yeah, a little bit past nine, like close to 9:30 actually. Also, price breaks down, comes all the way back, never comes back to the upper portion here, while NQ comes comes higher here and comes to the high of it, and YM is basically at the 50%. And then again, in this case, yes, because this is kind of weaker, it never came to this point, you would trade ES. I took, why did I take NQ? I just like trading in Q. So again, I want you, if you're doing this, I want you to be safe. So this would be a good trade to take, but this is where I deviated from my own rules simply because I like Q more. Okay, simple as that. But yeah, I sold here. Again, I sold this a little bit late. Sold here, you see my stop, it was a little bit less than, well, actually, no, this is exactly 2R, just below this low. And literally gave me that with 930, and then immediately, so I scalped back and forth. I entered the long here because I saw how 930, the ES with the bodies, see it wicked below it, but with the bodies respected the low, it never broke it, and literally the 930 just repelled from it higher. So I got my short covered, I got what I wanted, literally just by a little bit, and then got my took a long here, target above this high, while also YM is going way higher. And then again, you see that this candle, that bullish candle, eventually turned out to be a red candle. So it literally hit my take profit by it went maybe beyond by like 1 tick or 2 ticks and went lower. And then I shorted again. So it's 3 trades in a row in a short span of time. I shorted again here when I was convinced as, okay, so we bump into the high here, never broke above. We bump into the high, never broke above with the bodies. YM, see, broke this wick went way above the 7 a.m. high. So that's your kind of, I guess, classic SMT, ICT SMT too. So again, the bodies kind of went a little bit above the high, but that's why, again, I said it's YM. It's a little bit less precise. But this was enough for me to validate my short. So I shorted again. Here you see the stop loss like a 1.5-ish, I guess, R, just below this low. This. So see, that's like, again, if you can monitor the market so quick and make adapt to the information the market gives you, that's how you trade. In, out, in, out, in, out. So also 3 trades in a row. But there's nothing wrong with taking just one trade. This was a good pre-market trade, and you close the trade, where you enter the trade. Obviously, again, you see in swing low, it went there with 930, but well, this went here after 930. So what you can do is, again, you can just, if you're already in profit, so if you're scared, you take your trade off, you pay yourself like a 1-to-1, or at least, move your stop and, whatever it is, however you want it. There's no right way of doing it. I just trusted they're going to hit this low, and with it, so I held the trade. And I was already, this was, yeah. I think I traded, actually, I didn't catch this. I think I traded this also, because I think this was not my first trade for the day. So like I let it run. So hopefully this makes sense. Okay. You can see that here, PM session. This was a little loss here. I took a loss. I sold, but again, I made the mistake actually, because see, I sold it before 1 o'clock and it went finished. So this is 130. You're safer, like higher probability trades after 130. So first, this was a buy. See, did I have this? Oh yeah, this was first the buy here. This is very important. Look, this is interesting. Like all indices that basically that's your turtle soup below the low here, right? But look at the bodies. Look at the bodies. ES in this case again is stronger because the body is wick below, but they closed above this portion right here, right? The lowest body close. YM closed below it, but above the low. So based on this, actually, ES is stronger. But because I took a loss, so sometimes I took a loss on NQ, I wanted to get it back on NQ. That's just me personally. But technically, you can take a trade here. This would be the more, in line with what I showed you. This would be the trade here. And you see, it's kind of late. Some people would say, oh, you chased the price. No, I didn't. I saw a breakaway gap. I entered. This is like, again, I was recording this, taking screenshots specifically for you guys to see that I'm actually taking the trades based on what I teach you. This was a breakaway gap, the first imbalance after turtle soup. My stop loss, as you can see here, I entered just here, right? I saw we're going to take this high out. My stop loss was just below the 50%. 50% of this breakaway gap. And I was right to do it, so right, because it just like repelled high quickly. So so this was the logic behind it. You can see even that, but if you saw this on time, you could enter somewhere here. Let's say you saw this, like NQES. Let's say maybe this is a little bit advanced, like with the body stuff that closed above, like, but this closed in between. Let's say also you like NQ, you take NQ, you wait for this candle happened. This candle happened, this candle happened. Okay, this is definitely a buy. It's rejecting this area. You wait for this candle to come back a little bit into the candle. Your stop can be here or here, whatever kind of, whatever your risk appetite is. You can target an efficiency here, an efficiency here, or in the high here. So I took this buy. You see, I took a partial here off, and I took the rest of it above this high here. Because again, I took a loss here. I took a loss, 14 handle loss. So I paid the first partial, paid for my loss back on one contract, and 2 contracts, made me some profit. So this was that buy. And then look, it gave me another opportunity. Usually I don't really, I just saw, I was on the charts, I saw it, but this was at 4 o'clock. I'm not interested, like after 5, at 3:30, but literally this happened at 4 o'clock. You see, like right before 4 o'clock, like a few minutes before. This price, broke broke above, went all the way back down to the 50%, wicked it, bodies closed above, NQ never went to the 50%, while YM went below the 50%. So NQ was stronger. So at 4 o'clock, this was a very quick scalp. It lasted like 30 seconds. 30-second scalp, 15, what, like 14 handles, just on one contract, because again, it's the end of the day. In and out. That's something I saw quick. I entered and it was literally like less than a minute trade. So yeah, all these. This was an interesting trade actually. Again, you see how at 8 o'clock, I think it was 8 or 8:30. Was it? Price. The bodies respected this level here. NQ went to the high, wicked through the high, but closed below also. While it's 9, I think. Yeah, YM was below. It was literally just retesting below the range. So it indicates weakness. In this case, again, YM would be the weaker one to trade, but I don't trade YM. So I took a short on, was looking at, oh, my apologies. Okay, I'm looking at, but this is the trade that I missed. This was the trade that I took. Also, we're already below the range. We are way below the range. We come back to the range, but the bodies close below. YM is also kind of using that as a resistance. So I sold ES thinking that it's a weaker index, and it almost stopped me out. You see, I sold like at 14, and like the 930 wick, I did have large, like 6. I literally had my stop, I think, above this inefficiency. So it almost stopped me out. So on futures, you're fine. If you're trading on a CFD broker, you probably get, this would be a loss, but almost stop out. But eventually, this played out. And again, I'm targeting just a low here, a previous like an Asian low. That's why I have this I here and, partial here, closed out here. But in this case, I think NQ was actually the weaker. No, this was a stronger index, but did not give this wick. It did not, that 930, that's a 930 kind of shenanigans. It did not wick above it and just dropped. Well, yes, I believe it was weaker. It did this wick, so almost stopped me out. So I got lucky here because my stop was literally just like above this imbalance. So yeah, things like that. Here also how to take continuation trades. If you like, why would you buy in a premium? Well, it's not really in a premium because look, again, on this case, YM was bumping, broke above the high of the range. The bodies respected the range, bumped into it. And at the same time, ES and NQ were way above the range. So you just enter based on, this was a 1 minute thing. There's an imbalance or something I entered. And again, entry here. I don't remember where my stop loss was, but probably somewhere here. So entry here, close, above the high, like just a quick scalp, 15 handle scalp. That's it. So that's how one of the ways you can confirm that, okay, price is not going to retrace and go lower, or you can buy you can continue buying basically in the trending market. And, you should be fine if you understand this. You can, this correlation. This gave the hint. YM literally, so see if you have just 2 indices that you would, it would be hard to determine. But if you have 3 of them, YM gave a hint that it wants to go higher. Came back to the range. These guys were already above, and they are stronger, so you can buy either or, ES or NQ. So you see, you don't need, we have 2 minutes left. I think I exhausted kind of myself too, and hopefully this was helpful. I showed you the theory behind it, the logic. I showed you my personal trade examples, and you can, I think even if you have the free trades in you can go and maybe recreate them. It's a 5-minute chart. I think it's just, within the last 2 weeks. Mind you, this was during CPI week. These trades were taken during the CPI week, and still it works. So imagine when you don't have like NFP or CPI, it's like a lot of times it will be even cleaner and you can still take trades. So that's that. Hopefully, again, just, put it on, you have everything, once I have the time, maybe later tonight, I'll put the 2 videos together. I'll upload them, the private link on YouTube, and I'll share the link in the chat for everyone. So you can rewatch this, take the screenshot of the settings if you didn't already. Look, just have a play with it. I know some people might think it's too much to look at all 3 indices. but it's really not. It's really not, and it becomes second nature. Give it a try. If you still feel it's too much after a month or 2 weeks, then just don't use it. I can't help everybody. And again, the good part is that actually, this is the last part before we adjourn. We have 1 more minute left. This works on bonds. So I have the bond triad, 2-year note, 5-year note, 10-year note, same timings. It works on bonds. And for people who like to trade metals, you can just do silver and gold. How about that? Silver and gold do the same stuff. I don't know, maybe there's a certain metal you can include, like palladium. I don't know. But silver and gold, sometimes it will be not as refined as index futures. That's why, again, they just do index futures. It's amazing. If the price action is absolutely beautiful, but you can just put gold and silver side by side and look at those things that I shared. Cool. Maybe copper, yeah. Oil, I did not test this on Forex. I did not test this on oil. So it's up to you to figure out, and you can, if you're interested, you can tell me if you think it's valid. I don't know. Okay, so that being said, hope everyone has a great day, night, wherever you are in the world. Hopefully this was helpful, and just I'll send the link to everyone once this is ready, okay? Take care, guys.